What's up, everybody? This is Sunko, the Korean bro. Today is 2023, July 2nd. Okay, let's look at stock market tonight. Okay. Hmm. Hmm. This AI has stock gains more than Nvidia in 2023. Yes, it's still much cheaper. Two tremendous stocks to buy hand or fist in July. Three reasons Celsius stock is a no-brainer buy. United Airlines meltdown. One more reason to avoid the stock. Is Nike stock a buy now? U.S. money supply is doing something not since the Great Depression. It may signal a big move to comfort stocks. Hmm. One-on-one stash. EV race. Hmm. Okay, first. This AI stock has gained more than Nvidia in 2023. Yes, it's still so much cheaper. Hmm. Web browsing experience of the future. Opera is growing steadily and profitably. One incredible growth stock to buy hand or fist before it soared 684%. Struggling car market and macroeconomic headwinds have weighed on Tesla's EV business, but the tide is turning. Mm. One low risk Vanguard ETF that could triple your money in 12 years. Although there are still concerns surrounding a potential recession, now can be a fantastic time to consider investing. Many stocks are still priced well below their picks, and by investing now, you can snag quality stocks at a discount and set yourself up for substantial long-term returns. If you are a risk-averse investor looking to make the most of your money, there's one Vanguard ETF that's nearly guaranteed to keep your savings safe. Even better, it could triple your investment just over a decade with next to no effort on your part. Invest in the right places. If you're looking for a low-maintenance investment, they can also help you earn a substantial amount of money over time. The Vanguard S&P 500 ETF may be a smart option. This ETF tracks the S&P 500, meaning it includes the same stocks as the index itself and aims to mirror its long-term performance. The S&P 500 contains stocks from 500 of the largest and strongest companies in the US, including household names like Amazon, Apple, and Microsoft. While barely lifting a finger, compound earnings can help your savings grow exponentially over time. By investing now and simply letting your money sit for a few years or decades, you could earn more than you might think. Historically, the S&P 500 itself has earned an average annual return of around 10% per year. While it's incredibly unlikely you will see 10% returns every single year, the annual ups and downs should average out to around 10% per year over the long haul. If you are investing in Vanguard S&P 500 ETF today while earning a 10% average annual return, you would now you'd earn more than triple your money within 12 years, even if you made no additional investment in that time. To really supercharge your savings, however, you can continue investing a little each month. For example, say you invest $1,000 now, but you also invest $100 per month while earning a 10% average annual return. Here's approximately how much you could accumulate over time. While it can take decades to see substantial growth, investing in the stock market is one of the easiest, safest, and most effective ways to build wealth. And thanks to compound earnings, getting started investing early can dramatically increase your savings over time. There is no single correct way to invest, and the Vanguard S&P 500 ETF won't be right for every portfolio. But if you are looking for a low risk, low maintenance investment that can help you make a lot of money with minimal effort, it could be a smart option. S&P 500 could soar in the second half. Why Apple is the easiest AI stock to own? It's unclear if the Vision Pro will be a success and the new device doesn't go on sale until next year. But its introduction puts Apple on the pole position to control the next computing platform, meaning it's also the company most likely to own a device that serves as the vehicle for AI. If the technology is as powerful as AI bulls believe it will be, Apple's consumer tech ecosystem will grow even stronger. Apple has tons of brand equity in consumer hardware, competitive advantages through its installed base of 2 billion complementary devices. Another device that could be the next generation of tech hardware. If you're putting together an AI stock portfolio, Apple is a no-brainer. Zora. Hmm. The coronavirus pandemic was a growth catalyst for many software as a service companies, but it created a more difficult operating environment for Zora. The company's platform for implementing and automating subscription-based payment system is a long runway for growth. The company's platform for implementing and automating subscription-based payment system has long runway for growth. But large enterprises are its most important customer segment, and such businesses tend to avoid adopting new models and software systems during periods of economic uncertainty. That's meant a slowdown in new subscriber additions for Zuora, and its stock is trading down by roughly 3.5% on the year after some big swings. Shares are now down more than 30% from their closing price on the day of the company's initial public offering in April 2018. While challenging economic conditions and a lack of clarity about the future held Zora back in 2020, the good news is that the long term growth outlook for the subscription economy has not been meaningfully disrupted. Its progress has merely been delayed. While challenging economic conditions and a lack of clarity about the future held Zora back in 2020, The good news is that the long term growth outlook for the subscription economy has not been meaningfully disrupted. Its progress has merely been delayed. The rise of subscription based models at both the enterprise and consumer levels over the last decade is far from a short term trend. Companies have scrambled to reorganize their businesses around recurring revenue streams because those models lead to more predictable sales performance and greater profits over the long term. This value adding combination is bound to attract a growing number of business adherents. And Zora software offerings have the company in a good position to capitalize on the trend. The business should post better growth in 2021, and it wouldn't be surprising to see the stock make big gains. Provision of cloud-based subscription management platform. Project includes Zora Bling, Zora Revenue, Zora CPQ. It offers solutions to software, healthcare, education, B2C, and communication industries. The company was founded in 2007 by KV Rao, Cheng Zhu, and Tin Zhou, and is headquartered in Redwood City, California. Subscription economy, broadly speaking, 2020 was a great year to own software stocks. Social distancing created by the coronavirus pandemic meant business shifted more of their operations to digital channels. Consumers did more of their shopping and socializing online as well. However, not every promising cloud software stock benefited from a virus related momentum. Zora provides software as service solutions for subscription based billing, accounting, analytics, and more. The stickiness of high quality subscription businesses has been at the heart of stock market success stories, including Netflix and Microsoft, and strong performance for SaaS stock, large, may have had the effect of raising expectations for Zora. Unfortunately, enterprises are usually reluctant to shift to new software platforms when there's a lot of uncertainty on the horizon, and that's been slower growth this year. Zora sales still climbed at roughly 8% year over year in the third quarter, but it has suffered relatively sluggish performance due to the pandemic. Guidance for revenue to climb roughly 2% for the full year merely looks paltry in the age of high growth cloud software stocks, so it's not a huge shock that the stock hasn't participated in the SaaS rally. On the other hand, the rise of the subscription model is still just getting started, and Zora is in a great position to capitalize. The overall subscription economy looks poised for huge growth. Demand for fintech solutions in the category will likely rise dramatically over the next decade. With the company valued at roughly $1.7 billion and trading at 5.5 times this year's expected sales, investors can still purchase Zora stock at levels that look very cheap in the context of its potential. E-commerce stocks you can buy and hold for the next decade. Mercado Libre is delivering strong growth on the top and bottom line, acting as a dominant position in handmade and vintage e-commerce. Revolve is gaining market share in the apparel industry with its influencer-driven business model. Okay, Mercado Libre. While most e-commerce stocks have seen growth slow, Mercado Libre has bucked that trend. The Latin American e-commerce marketplace and digital payments platform have continued to deliver strong results. Well, in the first quarter, revenue was up 58% to $3 billion, and profits soared as well, with earnings per share jumping from $1.30 to $3.97. Mercado Libre also benefits from a network of complementary business that gives it a competitive advantage. Those included its e-commerce marketplace, its digital payments platform, Mercado Pago, its logistics service, Mercado Envios, and the financing arm, Mercado Credito. Those businesses have helped make Mercado Libre the e-commerce leader in Latin America and created barriers to entry for other companies. At the same time, the company has been able to layer high margin business over what was originally a direct selling e commerce operation. Those include its third party marketplace, digital payments business, lending business, its fast growing advertising business, which leverages the company's position at the bottom of the marketing funnel, making it attractive to the business that sells on the platform. With profit margins expanding and revenue growth continue to be strong, Mercado Libre has a bright future, especially as Latin America's middle class keeps expanding. Okay. Anyway, this is it for today. I did it for really short, but then I wanted to do it anyway. So I'll see you guys tomorrow. Okay.